Good afternoon, traders. It's Mark here from the DayTrading Room. Time is 12:30 London time on Wednesday, 13th of July. Sitting tight, waiting for import and export prices in an hour. Want to run through another trading setup from yesterday. This is the pre-market. This is the 24th session. I'm just going to move that up there so you can see the Dow. We did have some data yesterday at 1:30 international trade. Everyone's waiting for the FOMC minutes at 7 or 2 o'clock Eastern. But I just want to point out this setup, the trade I took after the data. Now, we've already talked about, in my last video, I talked about a reprice trade. So when there's a surprise move, a revaluation of the market you're trading, then a pullback, then a drive, deeper pullback, drive, longer term cycle lower, drive. That's the sort of way I like to position myself, assuming the market is doing doing the right thing. But what happens if there's no reaction? How do you trade that? Well, 9 times out of 10 or 8 times out of 10, you're not going to be able to trade. If there's no reaction, then there's no edge. But sometimes you get this little setup which just works nicely. Now, this is about midday London time. The data comes out 1:30 London time, which is 8:30 Eastern. You can see how we had buyers stepping in here. They drove it up a good 80 to 90 points on the Dow. So that's a nice little drive, reasonable bit of volume. Someone's interested in buying. Then they backed off. Now they didn't back off completely, because look at the strong support here at the 12,440 level. So instead of being aggressive buyers, they've backed off and said, okay, there's data coming out. We don't want to get too aggressive before the data, because we don't know if it's going to be a surprise and we'll end up paying up 5 minutes before data when we could get a better price lower. So, and this is all high guesswork, if you like. I'm just putting myself in the position of other traders and assuming that that's what's happening from this drive and then this little consolidation. So a passive buyer bidding there at 12,440, waiting for the data. So what happens? Data comes out 1:30. Nothing, no reaction at all, no reprice. We slightly drive down to tag that level. Now, how we position ourselves for this trade? Well, the theory behind the trade is that the buyer has backed off. He's just sat there and he's passively buying. If the data has not fundamentally repriced the market, then he's going to continue his buying. And that's exactly what happened. The support held, we popped up a little bit, and then we just saw some volume coming in and push it back up. So when that support holds, you've got a nice quantified risk. Wait for the support to hold after the data. No, nothing repriced there. Then we're going to start to push up. You're already long, taking some off obviously on the high, and then looking for the previous high of the 24-hour session, which was 87. I think we hit 88. Perfect little trade, worked beautifully. So what are the three things we need for that trade? For me, I like to have a premise or an idea of who is doing the buying, or who's going to be doing the buying after me, or short, who's going to be doing the selling after me. So that was the idea. So the idea of that is that there's a buyer there, he's driven it up, he's backed off, he's holding. What's the trigger for the trade, and how do we quantify the risk? 3, quantifying the risk, 2, the trigger, and 4 is the target. So 1's the premise, 2's the trigger, 3's the risk, 4 the targets. If you can get all 4 lined up, then you've got a nice trade. So hypothesis of the trade, as I said, was the drive there. Second, the trigger. Trigger was the data not repricing the market, and that 40 support holding. Very good support. It's shown its worth. It's now holding after the data. There's the trigger. Where's the risk? The risk is nice and quantified. It's underneath that support. You might want to give it a little bit of room in case we wicked under. That's why I like to just wait. Just wait until we've popped off it. You give back a few ticks, but your risk becomes more quantified. So in theory, you're actually getting a more efficient trade. So that's 3 to risk. 4, finally, the target. Where are the targets for the trade? Now, obvious target for me, first scale, is the prior high. It's a nice move. It's It's an 15 to 18 point move, and final target is logically the prior high. If there's strength to this market, then that's where it's going to push to. So using those 4 points, if you like, you can frame your trade and start to develop trading strategies. Now, this is something that this strategy, in terms of the market not doing anything on data and then continuing what it did before, is starting to appear a little bit more often now. We're either getting a reprice or we're getting a continuation of the market type before. So keep an eye out for that. That's worth watching. That's a nice little trade. And if you think of your 4 points, what is the reason that it's going to go up afterwards? Why does that trade work? Very important to think about that when you're taking a trade. Why does it actually work? Why does a fake out work? Why does a breakout work? Thinking about it a little bit clearly. 2, again, the trigger. The trigger here was the data not repricing and that support holding. Great. 3, the risk quantified. 4, the targets. Okay, so that's that trade. Probably gone on long enough about that. So that was a nice little trade to start the day off. And then the market again was very, very choppy. I pushed my luck a little bit here because this 40 was so strong through the rest of the overnight session, through the pre-data, should I say, pre-data. That 40 was holding so strong. I was looking to lean on that towards the open while the ticks were still confirming. So I actually I didn't trade as efficiently as I could, but nevertheless profitable trades. There's the 440 level. We poked underneath it. I'm looking for the buy. Now don't forget, at the open, you're not just looking to step straight in front of it. You're waiting to see the market bottom out. Let it come to you. If you're a buyer, let the market come to you. Try to time that turn. Watch your tape, watch your dome, watch your time and sales. Watch when the selling just dries up. If you need the confirmation of the buying, then step in. And that 440 was holding a little bit of an overshoot, but not by much. So there's the long, scaling out, holding. Now I traded this not as efficiently as I could because I held on to quite a lot of the position, scaled, and I was looking for that overnight high again, the 88, which was just under that, which was around here, wasn't it? Or 80. Oh, 88's about here, yeah, sorry, 88's about here. That's what I was looking for again, for it to tag that. It didn't, it came back and ended up taking a stop at break even on the last scale of the position. So scaling out, but then taking a stop. Second time we came down, again, I see strength here. I see the ticks not going that low, but a little bit lower this time. But interestingly, for me, it's this candle here. Again, I talk about pivot candle. I don't know why I call them pivots, but key candles, if you like, decision point candles, whatever you want to call it, are these 2 here. Get my screen pen out again. These 2 candles here, you can just see, okay, because that's the support around here. The 30 to 40 is the support. You've got to think of it as a zone level, especially when you're chopping around like this. That's the support level, and we probed through it. We push back up. Okay, now it can either go one of 2 ways here, can't it? We can either break, push back up, continue lower. That's the classic breakout pullback pattern. Or it's a fake out and it's going to drive higher. Now, how do you know how to play that? You don't. But you can wait till the market tells you. Now look, we've got the ticks going lower. We get a push back up to the break point. Call that the break point. There's the push back up. The market then fails to push lower on that candle and holds. The ticks now start to recover here. This is your long entry. Your stop's going to have to be below that low there, because if you're considering that as a flush low, you need to be, it doesn't want to be revisiting that level. And again, we've got a nice little pop. Played it the same way. I did a scale, held on to some of the position, and thinking we were going to get this time that we were going to get the, let me just zoom out again, we were going to get the overnight high. We didn't get it. I held on through all this here, came back, and then it just stopped me out again there, a break even on the last portion. So while it was still a still nice trade, still putting good money in the account, which was all about what it was all about. I was looking for that final target, but I didn't get it. But that's really why I scaled. I scaled so that if that happens to me, it's no big problem. So I scaled, and yeah, got stopped out on that final batch as it came back down to my entry level plus the cover the commissions, and then finally it came down to here, double bottoms, and I didn't get involved in this one, which was it's just the way it works with trading. The one I didn't take, I thought, okay, I've had a nice pre-market trade. I've taken a few trades here off the support. The support's held quite cleanly. I thought I'll leave this. Ticks are lower. The prior day's low was in sight. We could have had a little flush. We didn't. We double bottoms, and then we hit that new high, and the rest was history. So that was it for the day. We were just those couple of trades in the morning, just buying off that support. It's a little bit different to the continuation type trades. So you've got to look at the market in a different way. So yeah, a couple of new trade ideas. As I say, keep an eye out for that lackluster data that then allows the market to continue in the path that it was going before the data. That's a setup that's starting to occur a little bit more often now. And as we start to go into a quiet summer, next few weeks, get all the earnings out of the way and the data, then I'm going to start to position myself slightly lighter size and looking to buy and sell extremes rather than jumping on continuations, which have been working great. Looking to buy and sell extremes. I mean, the market could be completely different. It could be completely wild over summer. I don't know. But if it goes into a low volume type market, looking for those probes at the open to highs or lows, for pushes that push a little bit further than you think. So you just wait, and then looking for the pullback to the mean, if you like, a sort of mean reversion type strategy. But I'll let the market tell me the best way to trade it. So good trading, guys. As always, manage your risk. It's so important. Perhaps I should have made that number one on the list of 1 to 4. Know where your risk is, but that's very, very important that you manage your risk. I know I keep going on about it, and I know I say I keep going on about it, but it is so important. It really is. So good trading, guys. Thank you for your comments, emails, etc. I shall be back with another video later in the week. Take care.